Get in Vishwanath Nair to talk about the quarter and take it forward with the management as well. Vishy.
All right, so J&K Bank actually delivered a mixed quarter with softer NII but higher profitability for the bank, alongside continued improvement in the asset quality scenarios. Of course, sequentially, both gross NPA as well as net NPAs have improved. I've got Amitabh Chatterjee, the MD and CEO of the bank, with me to discuss the numbers and take it forward from there. Mr. Chatterjee, welcome to this conversation. Let me start off with what actually contributed to the rise in profitability for you this quarter, considering that the NII has not been quite soft.
See, if you look at all the components, we have improved on all the components. Since we had a very robust credit growth, so the average advances went up. That led to a very good interest income. That is one. Second, we had a very good recovery in lost assets, I would say, NPAs which were fully provided for. So which resulted in a reversal of provisions. Then we also had a very good recovery in written off accounts. That also contributed. And the other income also contributed, including these things. Other income also contributed largely towards the improved profits. I would say the cost of deposits went down slightly from last quarter because of the transmission of the interest rates happened gradually. I would say all the components have shown improvement in the bank.
Sure. This quarter has also seen a sharp increase on the credit growth front. Can you tell us a little bit about what you're expecting for the year? Earlier, you had said 12 to 15% credit growth, but are you expecting to end the year higher?
See, we have YOY, we have grown by 17.28% gross advances. So it is much above the guidance that I had given. Obviously, I had said the initial beginning of the year, the guidance was 12%. But by the end of second quarter, I was very confident about the pipeline that we had. So we have comfortably crossed 17% YOY. However, I think we still will maintain that we will be around 12 to 15% end of the year. Looking at the subdued deposit growth that has happened in the industry so far. So I would say that 12 to 15% I'm absolutely certain of achieving. So if we look at the year-end targets also, we have achieved 9% of that. So the 12% guidance is almost, a month away from here. So that is not a problem. But yes, 12 to 15% would be good. But this, up to this quarter YOY, the growth has been 17%, 17.28%.
You talked about the subdued deposit growth across the industry, but specifically for J&K Bank, that gap between advances and deposits is quite large, the growth rate gap. How do you actually aim to bridge this? Because 700 basis points is large.
True. But this gap is in the third quarter. I said 10 to 15% in the advances and maybe 1 to 2% additional growth in the deposits that will narrow down the gap. Say 12% growth in deposits, maybe 10 to 12% and 12 to 15% in advances. So the gap will be narrowed down, but the gap will still be there, and it is there for every bank if you look at the numbers.
Let me just try and understand this credit growth scenario a little bit better. What exactly is contributing to this growth? How do you push it forward? Is there any specific segment that you're looking at? Considering specifically because of the GST cuts that have happened during this quarter, the impact of that and the rate cut that has happened in December, how is that helping you?
See, our bank has primarily been retail focused. So the retail growth has been 57% YOY, and the corporate growth has been 43% for this financial year. And if we look at the contributors, Jammu and Kashmir would have contributed 57% of the growth, and 43% of the growth has come from rest of India. So initially that our strategy was to ensure that we have sufficient contribution from the rest of India branches. We are present in 22 states. So that is already started happening. Now, if we look at the individual sectors, the growth has come, double-digit growth has come from both agriculture as well as corporate banking. On both of these sectors have given double-digit growth. And car loan, as you mentioned, the GST cut, car loan has grown substantially well during this quarter and sometime last quarter also. So three components which I can say have given robust growth are these three. We still continue to do well in the retail advances, primarily the personal segment, unsecured loans also, which contributes a fair amount.
Quick understanding on this recovery as well. This quarter, you mentioned you've seen a very high recovery ratio during this quarter, which has of course helped the profitability. Large accounts, or is this also smaller accounts showing that better recovery for you?
We had a very substantial recovery during this quarter. You would have noticed the credit cost is nil. So there was substantial provision reversal because of a large value account getting recovered. So that continues. If we look at bad loans getting recovered, I would say high value recoveries have been to the tune of 150 crores this quarter, both on account of NPA as well as return of accounts. So the recoveries are coming, and the focus of the bank on recovering bad loans has been very steady for the last, I would say, 9 quarters. And it continues to be so.
Your auditor has talked about the merger with J&K Grameen Bank that you did during this quarter. You've also made some provisions against this. How do you think this is going to pan out? Do you think that you will need more provisions going ahead to ensure that this merger helps you going ahead?
So that is the best part and the worst part. The best part is we have made all the provisions that were required, and the fact that we had to provide almost 180 crores because of this, considering a total profit last year we had 2,082 crores, is a substantial amount for a bank like this size. So we had to take this hit. The amalgamation was a decided thing. It was not a decision by the bank, but we have managed to take into our stride, and we have made all the provisions, and the amalgamated entity has started doing well. Last quarter it did well. A few old expenses, previous quarter expenses were squared off this quarter. So this quarter it hasn't shown maybe that kind of a result. But by the end of the year and probably in 2 quarters time, this amalgamated entity will also be doing well. So no further provisions. All the hit that we had to take is almost 180 crores. So all the hit that we had to take, we have already taken.
Okay, Ms. Amitava Chatterjee, thank you so much for joining us on this conversation, sir. It's a pleasure as always talking to you. That was Amitava Chatterjee, the MD and CEO of J&K Bank. Mixed set of results, but credit growth looking very, very strong.